Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. Philippine Central Bank Governor Ellie Remolona says there isn't going to be a big rate cut later on this year. How are the BSP's rate cuts affecting the property market? We'll ask Delfin Angelo Wenceslao, the president and CEO of DM Wenceslao and Associates, later on in the show. Vehicle sales in the Philippines rise as car companies roll out new promotions. And spending by foreign tourists in Japan sets a new record in just 9 months. First, let's take a look at the financial markets. U.S. stocks climb, pushing the Dow Jones to a new all-time high, driven by strong corporate earnings results. The Dow jumped 0.8%, marking its third record high in 4 days, while the S&P 500 increased by 0.5%, also near record levels. The tech-heavy Nasdaq gained 0.3%. Wall Street was boosted by positive earnings from Morgan Stanley and United Airlines, despite weakness in mega-cap growth stocks, indicating a shift towards stocks that thrive in favorable economic conditions.
Markets are modestly positive today, recovering a little bit from some small jitters in the last couple of days. What's most interesting is we're seeing a little bit of a rotation, where the prior leaders, the big tech that's been leading the way for the last year or so, is giving way a little bit to some other parts of the market, some other sectors, a little bit more of the value players doing a bit better, which is no harm to see.
In Europe, the UK's FTSE 100 hit a near 4-week high after an inflation report came in lower than expected, strengthening the case for a Bank of England cut. Now, in contrast, Germany's DAX fell 0.3% and France's CAC 40 lost 0.4% due to weak results from semiconductor maker ASML and luxury goods giant LVMH. Here in Asia, markets are mixed. Japan's Nikkei 225 is flat with a slight downward bias, while South Korea's Kospi is up marginally. Elsewhere in the world, down under, Australia's ASX 200 is up by 1.1%. Over in the commodities market, oil prices are rising as traders balance potential supply disruptions in the Middle East against a weak outlook for global demand. Brent crude is up by 0.5%, trading at $74.60 a barrel. Meanwhile, gold remains steady as the U.S. presidential race continues to drive the demand for safe haven assets. The Bangko Sentral ng Pilipinas cuts its benchmark rates by another 25 basis points as inflation continues to ease. The second rate cut this year brings the BSP's benchmark target reverse repurchase rate to 6%. Central Bank Governor Ellie Remolona Jr. says another 25 basis point cut is likely at the final policy meeting of the year in December. While some analysts have suggested a larger 50 basis point cut, Remolona says that would be too aggressive and only justified in a hard landing scenario. Although inflation is easing, the BSP slightly raised its inflation forecast to 3.3% for 2024 and to 3.7% for 2025, citing potential increases in electricity rates and higher minimum wages in areas outside of Metro Manila. This matters because while rate cuts can make it easier for businesses and consumers to borrow and spend, boosting economic growth, the central bank must also watch out for the risk of rising inflation due to higher energy costs and wages, which could offset the benefits of these lower interest rates. Sales of vehicles in the country are on the rise as automotive companies step up their product promotions. Janiel Baroga has the details.
The local auto industry ends September with vehicle sales totaling to 344,307 units, a nearly 10-point increase from the same period last year. That's according to a joint report by the Chamber of Automotive Manufacturers of the Philippines and the Truck Manufacturers Association. Sales also climbed month-on-month by 1%, with 39,542 vehicles sold in September compared to 39,155 in August. CAMPI President Romel Gutierrez says, quote, the increase can be attributed to new stock arrivals and improved promotions from the brands, end of quote. Commercial vehicles accounted for 74% market share, while passenger cars cornered 26%. Toyota retained its pole position with a market share of 46%, followed by Mitsubishi with 19, Ford 6, Nissan 5.9, and Suzuki 4%. Last September, no new models were released, possibly due to the upcoming Philippine International Motor Show, where new launches are expected. Janelle Baroga, BNC.
In other news, production of palay or unhusked rice is expected to decline by over 10% in the third quarter. According to data from the Philippine Statistics Authority, palay output is projected to reach 3.35 million metric tons for the July to September period. This is down from 3.8 million metric tons in the same period last year and lower than the previous forecast of 3.39 million metric tons for July. The total harvest area is expected to shrink by 14% to around 800,000 hectares. But yields per hectare may improve slightly to 4.2 metric tons compared to last year's 4.1 metric tons. By early September, about 39% of the harvested area had already yielded 1.31 million metric tons of palay. Of the remaining crop, 16.5% is still in the reproductive stage, while 83.5% is maturing. Rice production remains highly vulnerable to the impacts of El Nino, which brings drier conditions, reduced rainfall, and more intense typhoons. The Philippines is lifting its ban on live cattle and meat imports from the United Kingdom. This decision follows Britain's successful containment of mad cow disease, which had affected the livestock sector. Agriculture Secretary Francisco Ch issued a memorandum lifting the ban, which had been in place since May to protect consumers and to safeguard the local livestock industry. Laurel says that the UK has provided evidence that its food safety measures now meet Philippine standards. The mad cow disease outbreak in the United Kingdom was declared over in August, with no new cases reported. Now, for the business community, this move opens up new opportunities for meat importers and distributors, potentially boosting trade and supply in the livestock market. Consumers will also feel the benefits from greater choice and competitive pricing. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basic Points. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now, the market is in the green. The PSE index is up by 0.4% to 74.67. This brings us to gains of about 15% year to date. Now, all shares index up as well, up by 0.4% to 41.14, cheering the rate cut yesterday by the Bangko Sentral. Now, the financial sector, that's up. Holding firms, services, mining and oil counters, and the property counter up as well. Going the other way, the industrial counter down marginally, down by just 0.2%. Now, the foreign exchange market, the peso opens weaker from its previous close of 57.70, opening at 57.79 against the greenback. Now, as we mentioned earlier, the central bank has cut interest rates twice this year. But how are these rates affecting the property sector? Joining us live to talk about this and more is Delfin Angelo Wenceslao, or Buds, the president and CEO of leading property developer DM Wenceslao and Associates. Hi, Buds.
Hi, Maiki. Thanks for having me.
We're happy to have you here with us, especially to talk about all these changes in the macroeconomic fundamentals and how they're going to affect your sector. So much has changed, and just in the second half of 2024. Just yesterday, the BSP cut interest rates again by 0.25 percentage point. This brings us to 6% already. This amid cooling inflation, the lower reserve requirement ratio for banks, and steady economic growth. How do you see all of these changes on the macroeconomic landscape affecting the property sector?
Well, the Philippines real estate is actually entering a renewed growth cycle because of managed inflation and lower interest rates. I think last August was the first rate cut they did. They also announced one again yesterday. I think with this, with increased consumer spending, it will help retail. It will lower down mortgage interest rates for residential buyers. And for new construction, it will also lower construction loans.
Mm-hmm. That said, how are things shaping up for 2025?
So at least for us, we're pretty excited. This is actually DMW's biggest leasing year. So we're currently still increasing our recurring income projects. We're actually going to launch our next 2-tower office project, Asiana Plaza. We're about to launch our build-to-suits for our medical facilities and educational facilities, and we're actually about to launch also a new 200-unit co-living/affordable housing project.
Okay, interesting. Going back to the industry, what are the trends that you're noticed in the construction and property development industry, given the shifts on the macroeconomic front?
So remote work is still there, but I think there's a lot of opportunities tied to that. You know, pre-pandemic, there's always been this sense of building livable, walkable communities. During the pandemic, there was a rise of 15-minute cities and having essential goods and services being nearby. And now we're seeing a lot of talk about resiliency. And I think all of this is tied up. That's why, at least for DMW, we see a big advantage in doing mixed-use master plan communities, which further adds to the holistic development of Asiana City.
Mm-hmm. Another trend that emerged post-pandemic is the demand for remote work. How does that affect, how do you think that's going to affect leasing in the property sector in general?
So with that and new supply, you know, it actually had a detrimental effect in terms of vacancy. But I think it also gave an opportunity for developers to build more experiential spaces. You know, what do I mean by that? I think office people, you know, decided that they don't just want to cram into these air-conditioned boxes. So developers are now putting up, I think, more spaces which enhance collaboration, interaction, and community building.
Okay, and that's big for the leasing market. They don't just want these air-conditioned boxes. What more do they want?
So even for us, you know, pre-pandemic, we saw this already. That's why we never stopped building during the pandemic. We launched our 5-hectare, 70,000 square meter mixed-use project, Paracal. It's a mix of retail, public space, and office. And we've seen increased take-up of that. That's actually contributed to a lot of the take-up from our current supply right now in 2024.
Okay, so coming into 2025, where do you see the demand in the property sector?
So for us, you know, there's been renewed interest specifically coming from the shipping and mining industries. Actually, they took up about 60 to 70% of the supply we gave up. We see again that there's a flight to experience. You know, they're coming from much older buildings and they're seeing this new space. You know, there's plazas, spaces for wellness, for sports, for collaboration, and that's what attributed to a lot of the take-up that we've seen.
Expectations and standards have gotten much higher, and also everything needs to be Instagram worthy.
Absolutely.
Okay, now going back to your particular company, DMW started in the 1960s as a general builder and contractor, but you built your reputation as a reclamation specialist. But since then, you've diversified into property development with the 107-hectare Asiana City. What's the thrust of the company now?
You know, being a 60-year-old construction company, we've seen the peaks and valleys in terms of the cycles of construction. So for us, real estate was a way to basically level that off, to make it more consistent, make it more predictable. So right now, we're still focused on building our recurring income projects. That's why we're focused on commercial projects, namely office and retail. And I think for the next decade or so, we still have a lot of land bank left. We're just going to continue to lease, sell, and develop that land bank.
Mm-hmm. So complete shift away from the reclamation work that you did about 20 years ago.
Yeah. So, you know, for us, in the end, real estate is about location, location, location. And we have one of the largest contiguous land banks left in a prime location in Metro Manila. So I think for us, this is where the alpha is.
Correct. ASEAN is home to the City of Dreams, Ayala Mall, Singapore School, numerous condos, and St. Luke's Hospital, which is under construction. When's that going to be finished?
So they're about to start construction. So we're expecting about 5 years' time.
5 years' time, we'll have St. Luke's in Asiana City. All right, interesting. You also have 30 hectares left in Asiana of undeveloped land. What do you plan on doing with this?
So at least for the next year, for the next 5 years, we're planning to continue our office projects, namely Asiana Plaza. That's a 2-tower, 80,000 square meter office. We're planning to do build-to-suits for medical facilities besides St. Luke's, and for co-working and co-housing projects.
Okay, now let's go to the numbers. How has 2024 been thus far from the first half to the second half, given, all these changing macroeconomic fundamentals?
So first half, year in year, we've actually had our biggest leasing year ever. We've been able to increase our recurring income contributions by 34%, increased our occupancy from 50 to 80%, and our recurring income contributions have actually increased to 86% from last year.
Now, in 2023, you had 1.7 billion in core earnings. Now, for 2024, I know you're expecting double-digit growth. Where's that growth going to be coming from? And are you on track to hit your target for 2024?
We're actually exceeded our targets already in terms of leasing. So right now, we still have about 50,000 square meters of leasable area left. So I think that supply will be enough for us for the next 1 or 2 years, and that's where most of the growth will be coming from.
Okay, so 2024, double-digit growth. 2025, double-digit growth as well?
So we're hoping and expecting that with the new office spaces that were coming up, that's where most of the growth of the company will come from.
Okay, in terms of capital expenditure, historically, you've been spending about 3 to 4 billion pesos in CapEx. 2024, 2025, are they going to be any different?
They're going to be this more or less in line or the same with that. We don't want to sacrifice our profit margins for growth, and that's where we see where the sustainable take-up is in terms of that CapEx expenditure.
Specifically, where are you going to be spending that money on? 3 to 4 billion pesos in
So
CapEx?
It's mostly still going to be recurring income. We still want to keep that 50 to 60% recurring income contributions. It's mostly going to be from projects that are going to be for lease.
All right. Looking at your 5-year pipeline, what are the top projects that you want to roll out?
So our next 5-year pipeline is actually Asiana Plaza. So those are 2 towers. And again, we're building out our next developments in terms of our co-living spaces. That's a 200-unit that's about to break ground by first quarter of next year. And we're also planning our own co-working space as well.
Okay, now also recently you partnered with Meralco's Empower for Energy Solutions. Talk to us about the benefits of this collaboration and meeting your ESG commitments as a publicly listed company.
So, real estate is probably attributable to about 30% of the carbon emissions globally. They also use up 40% of the energy requirements of the entire world. So for us, as a publicly listed developer, we don't just see it as the right thing to do. We see it as a smart thing to do. We saw the volatility that happened during the energy rates and during the pandemic. So it's also a way for us to help our multinational clients reach their own green emission standards as well.
All right, well, you built the city. Now it needs to be powered continuously. All right, thank you so much, Buds Wenceslao.
Thank you so much, Maiki.
And that was Delfin Angelo Wenceslao, the CEO and president of DM Wenceslao and Associates, sharing his insights on the property sector and much more with us. We're taking a quick breather. Basis Points will be right back. Welcome back to Basis Points. President Bongbong Marcos is urging investments in infrastructure to boost local mineral processing in the Philippines. Marcos emphasized that the country, rich in natural resources, stands to benefit from the global shift towards clean energy, which has driven up demand for critical minerals.
To truly harness this potential, we must invest in the infrastructure and the technology required to process these minerals domestically. And at the same time, it is imperative that we adopt mining practices that prioritize the environment to ensure that our extraction processes are clean, efficient, and restore the land that has been mined.
The president also called on lawmakers to support the rationalization of the mining fiscal regime. This proposal introduces a four-tier royalty system, ranging from 1.5% to 5% applied to income from mining operations outside designated mineral reservations.
Which I highlighted in my 2023 SONA, is fundamental to creating a fair and equitable mining environment for everyone involved.
This is about maximizing the Philippines' mineral resources to boost the economy, support clean energy, and to ensure the government gets fair revenue from mining operations, all while attracting more investors to this sector. Delegates from dozens of countries are meeting to stress the need for increased investment in climate action. For more details, here's Sujin Kim.
The environment and climate change, high on the agenda of the 2024 Investment Policy Forum. The event gathers nearly 100 delegates from 40 countries to discuss equitable and sustainable international investment policies. For UN Special Rapporteur Professor Surya Deva, now is the right time to give special attention to environmental and climate challenges.
We are not respecting the planetary boundaries. And Philippines is a typical example where a lot of natural disasters are impacting people all the time. So think of the development differently in terms of the investment landscape. So the private sector has a key role to play, and the governments also have a key role to play.
These pressures require strong investment frameworks that reap benefits for people and mobilize resources for governments to invest in education, health, and much-needed infrastructure.
The aim of the forum is for different investors to create and bring home a sustainable development toolkit that they can develop in their own countries.
So a forum like this should be able to bring the policymakers together to ensure that they don't merely look at economic development, but they also look at it from the lens of more holistic development, which is cultural, political, social, and economic development.
This is the first time the Philippines hosted this event, which comes on the heels of the Asia-Pacific Ministerial Conference on Disaster Risk Reduction. The APM-CDRR, which was also held in the Philippines, likewise highlighted the need for investors to embed in their corporate plans disaster risk reduction and resiliency strategies. Sujin Kim, BNC.
Before we go, visitor spending in Japan breaks an annual record in just 9 months, thanks to a tourism boom. Official data shows tourists have spent 5.9 trillion yen, or $39.3 billion as of September. This already beats the previous yearly record of 5.3 trillion yen, or $34.7 billion set in 2023. The tourism surge, helped by a weaker yen, has made tourism Japan's second biggest export industry after cars. The average visitor spent 223,000 yen during their stay, with Italians, Spaniards, and Russians leading as the biggest spenders. So far, 26.88 million tourists have visited Japan this year, putting the country on track to surpass the 2019 record of 31.9 million visitors. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.